Hello, good morning. It's a rather glorious Friday the 29th. I'm FxPlew and this is the market brief. So the UK housing market may be due for a downturn. So far it's been fairly immune to rising interest rates, but higher rates and the cost of living crisis may combine to make homeowners think twice about selling up and moving on. Lloyds Bank is Britain's largest mortgage lender and their mortgage book only rose by 1% in Q2. The CEO reported that figure was propped up by clients remortgaging to lock in lower rates, and indeed without that activity the number would have fallen significantly. The Bank of England is due to raise rates by 50 basis points next week, and naturally the mortgage rates will have to move higher in line with this. The slower drip feed of 25 basis points each month was intended to tighten monetary policy while allowing the economy to maintain a level of activity. The fear, of course, was that bigger rate hikes may choke off economic growth. So far, this has had zero effect on inflation, and maybe they need to swing for the fences now, regardless of the recession risk. Go big or go home, perhaps. Assuming, of course, 0.5% is considered going big these days. Sterling has recovered pretty well over the past couple of weeks, where the Fed's future action has come into doubt. So the yield appeal of the dollar has also been called into question. We topped out around 121.90 yesterday, but broke 122 overnight. We opened this morning around 122.25. We're at 119.25 against the dollar, and euro dollar kicks off this morning from 102.50. Parity was short-lived, wasn't it? Who got their knickers in a twist over that one? So the US contracted in Q2. It was a smaller contraction than Q1 though, but all the same. Powell says we're not in a recession though. Check the rule book, big guy. 2 consecutive quarters of negative growth, that means you're in recession. You can't argue with that. If you want to discuss the significance of any recession with such inconsequential negative growth, I'm all ears. Just don't start denying it's a recession though, you'll sound like a flat earther. So yes, the US is in recession now. The Fed chose to ignore that, most likely because it's a minor technicality and they plan to do nothing about it. Does that sound a little bit like transitory inflation all over again? We know how that one worked out for them, don't we? And far be it from me to mention stagflation. That's the horrible economic trap when you have high or rising inflation coupled with negative growth or recession. That all sounds rather familiar, doesn't it? But if they are ignoring recession, it's pretty unlikely they'll entertain stagflation as a reality anytime soon. The market strips through semantics though, and almost by way of protest, the dollar index continued its recent decline. That dropped off close to the 106 level as concerns over recession and indeed stagflation saw demand for the dollar dry up a bit yesterday. Right, well that's it from me, capping off another week. Thanks very much for tuning in, and join me again on Monday. All the best.
If you do not have a clue, then just tweet through and ask FxPlew.